Let's move with treatment of loss on consignment. That's in consignment, treatment of losses. As we have discussed before this, all the risk and reward pertains to the consignment belongs to whom? Not to the consignor. So whatever the loss comes into picture in case of consignment, that is of course to the account of the consignor. So consignor is going to bear all the losses pertaining to the consignment. Let's say, for example, on the way some accident happened, in transit some accident happened, there is a fire, there is a breakage, any kind of losses will be borne by the consignor only. Consignee has nothing to do with the losses. But, right, the treatment of losses, again, slightly differentiated, like based on what kind of loss it is. Is it a normal loss or is it abnormal loss? So, any loss, no doubt, it is to the account of the consignor. Now, broadly we categorize the loss, right, into two major type of losses, which you call it as, that is normal loss as well as abnormal loss. So, what is the treatment of it? What is it? What is normal loss? What is abnormal loss? We'll just go one by one in detailed discussion. Is that clear? So, one thing, make yourself very clear. Whether it is normal loss or abnormal loss, whatever the loss it is to the account of the consignor. But whether it is normal or abnormal, the accounting treatment will slightly differ. Now, what is the treatment? How to do the valuation of the losses, etc., etc. We'll just go in detail one by one. So, have a look. Let's first move with normal loss. What is normal loss? Now, it is very simple. When you say normal, it means this loss is there to everybody. So, loss which is due to the inherent nature of material, and this is a loss which occurs for everybody in the similar industry. As I said, which is unavoidable and which is due to inherent nature of the material. Like liquid item will get evaporated, right? For example, you are dealing with coal, a part of it will get converted to dust. Cement, a part will become dust, right? Let's say you are dealing with, you are buying wood and converting into wooden structure. What do you need to do? You have to cut the wood. There will be dust, there will be cut pieces, right? That is, again, you cannot avoid it. You have to cut it because to make furniture, you need to cut it. Let's say you are buying cloth and convert it into garments. So, of course, you have to cut the cloth. When you cut the cloth, no doubt there will be some cut pieces. Without that, you cannot stitch it. But yes, how much supposed to be the cut pieces? And whether you are doing more than, suppose your workers, your employees are unskilled. Let's say 5% supposed to be cut pieces only of the total quantity of the cloth what you have purchased. But your actually is coming to 8%, 9%, 12%. I'll consider whatever over and above the normal industry average. We'll take that as an abnormal. So let's talk about the normal loss first. So as I said you here, you buy cloth, cut it to cut pieces. Then of course what happened? After cutting it, you have to do the stitching, etc. So there will be some part will get converted to cut pieces. As I gave you the example of you buy wood, right? You buy wood pieces and convert it to wooden structure. Of course, there will be a portion will get converted to dust, cut pieces, etc. You can't help it. It has to be there. Let's take into consideration, let's say, petroleum product. As you know, when you keep the petroleum product open, it will get evaporated. So, for example, let's say take into consideration your petrol. It is, let's say, the crude oil comes and then it gets to the refinery, from the refinery and just get refined. Then you get, as far as the petroleum product is concerned, it just get refined. From refined, it goes to, let us say, depot. From the depot, it goes to the tanker. From the tanker, again, it comes to, let's say, the transport reaches the petrol bunk. And in the petrol bunk, again, it is get, from the tank, again, it get loaded to your vehicle. So, in all this process, what happened? In spite of taking all precautionary measure, still it get in contact with air. So when it gets contact with air, obviously it will get evaporated. So just imagine if you keep a 1 liter of petrol in an open vessel and keep it open, it will get evaporated. So it doesn't mean that we'll keep our petrol tank open and see how much is getting evaporated, obviously, right? What do we supposed to do? After all precautionary measure, matlab every transportation with properly airtight measure, in spite of that, a portion will get evaporated because some or other point will be in contact with air, and when it is in contact with air, obviously there will be evaporation. So that particular loss, it is not only for you or me, but everybody in this industry. So then how to restrict it? Now you cannot restrict it. You cannot make it zero. It will be there. It is by nature. That's what we call it as inherent nature of material. Let's say, take into example, let's say coal, right? As you know, coal, we get it from, let's say it is from coal mines, it has come, it goes to the depot, from the depot it goes to the distributor, from distributor it again get loaded to the individual customer's lorry. So in this process, one point loading, other point unloading, in this process, what happened? Now it will just definitely a portion of it, because when you do, as you have seen, any commodity which is dust by nature, when you just do the loading and unloading a little faster, the dust will be more. So suppose, what do we say to our worker or employees? Yeah, just do the loading and unloading very slowly. What they did? They went slowly, did the loading slowly, came back slowly, did the unloading slowly. So you will just see the movement of their workers we restricted. We said just do it very slowly because the dust will be lower, for which they have gone for a catwalk. So in a day, what we found, instead of loading, let's say 100 lorries, they have loaded only 20 lorries. When you ask them why, what has happened, they said, sir, you only asked us to, right, do it very slowly. So what happened? We might reduce it, but that doesn't mean the dust formation will become zero. And the other side, what will say, here this side our loading unloading cost has gone up. Why? Now we ask our people to do it very slowly. So of course, what we have to see here, cost benefit. Here if I am slowing down, how much I save, that is the reduction in the loss. And the other side, how much my cost has gone up. I do always a cost benefit analysis. So here the coal getting converted to dust, a portion, definitely it is a normal loss. We buy liquid item and we sell a part of it, get evaporated, that's a normal loss because it's by nature. Fine. So normally what happened, we don't go against the nature. We said fine, it is there for everybody, even it is there for us also. So then who is going to bear the loss? How exactly the normal loss is getting or normal loss, the treatment in case of normal industry as well as consignment? It is not different at all. It is the one and the same. So then what? Who bears the normal loss? Who bears the normal loss? I'll give you a very small example. Have a look to this. Acha, before this, again, normal loss is something predetermined. Who has determined it? Now, our own practice, the industry, everybody in this industry, right? You will find out that is a portion of this commodity will get converted or it will become normal loss. For example, you are dealing with glass items. So in the transportation of the same, there will be breakage, there will be wastage. You can't help it. It is by nature. You can just take all precaution to reduce it, but you cannot make it zero. There will be breakages, there will be damages. Fine, take into consideration oil. Right? You must have seen, if you go to your oil shop and check, what you will find out? You will find out like below the bigger vessel, he has put something, a container. When he just do the measurement of oil, something gets spill over and he'll collect it in that. In spite of all this, there will be still some losses. So those things we call it as a normal loss. Then what is the treatment of it? How exactly the normal loss will be adjusted? Who is going to bear it? How the normal loss will be treated in accounting? Then we'll take it to consignment. Is that clear? Now let's have an example. This very small and simple example I am giving you. Have a look. Let's say some 1000 liters or let's say 1000 kgs. Okay. 1000 kg of some material purchased, send it to the consignee for sale. So what happened? 1000 kg he has purchased. Let's just forget about consignment. Let's just take a simple example first. What is the treatment of normal loss? Let's say we purchase some 1000 kg. It is our own business. We purchase 1000 kg, right? Let me say purchase. Purchased some 1000 kg at the rate, let's say rupees 45 per kg. And let's say normal loss, let's say 10%. Who decides this 10%? As I said, industry. Industry average which decides the normal loss. In the sense, our own past track, The same industry, because we are not the first person to coming into the business. Even if we are coming first time into this business, nobody has done it, then we ourselves, we have to set our normal loss percentage. So what happened? We found normal loss is 10%. So please tell me, suppose, imagine, suppose you want or I want a profit of, let's say, I want a profit of rupees 10 per kg. What should be my selling price? Is it 45 rupees plus 10 rupees? Answer is no. Then how much it is? Now when I say normal loss is 10%, of course from this I'll pull out normal loss. How much in 100 kg? So if I'll ask you, how much is the sellable quantity? Right? Sellable quantity or usable quantity, it comes to some 900 kg. Now if I'll ask you, 1000 kg purchase for what value? Now 45 rupees per kg. So what was the total cost of purchase? It was 45,000. Now remember, this 900 kg, because my sellable quantity is only 900 kg. Now this 900 kg, what is the cost? Cost remains the same. That's 45,000. Right? This is of course 45,000 rupees. So please tell me, if I'll ask you, how much is the cost per kg now? Now it is no more 45. It has become 45,000 divided by 45,000 divided by, that is 900 kg, which comes to rupees 50 per kg. So please tell me, we purchase it for 45 rupees. But what is the cost for us now? It is 50 rupees. Why? Now if you'll just see here, if you'll just imagine, just exactly go inside this transaction. It means what? The cost of this 100 kg, what we purchase at 45 rupees per kg, gets spread over, get allocated over, get absorbed by the sellable quantity, that is 900 kg. So by the process, cost per kg goes up. Understood? So we purchase it for 45, but now it is no more 45, it is 50 rupees per kg now. So now if you want to make a profit of 10 rupees per kg, the selling price will be not 45 plus 10, it will be 50 rupees plus 10 rupees, which comes to rupees 60 is the selling price. Understood? So the selling price is not 45 plus 10, it is 50 plus 10. So please tell me then, your students, who is bearing the normal loss? It is the product. By default, it is by the end user. Today, if your petrol price is 75 rupees, 80 rupees, 85 rupees, whatever, it is very much after taking into consideration the normal evaporation. So who is bearing the normal loss? It is not the owner of the business. It is the end user, that is the customer. We load the cost of it over the product. Is that clear? So what happened here? By the process, we purchased for 45 rupees per kg of the goods. Now it has become 50 rupees per kg. So now my selling price, if I want a 10 rupees profit on 50 rupees, 10 rupees profit I want per unit or per kg, then of course my selling price will be 45 plus 10, it is 50 plus 10. So what happened in this case? So please try to understand, we purchase 1000 kg. But sellable quantity only 900 kg. Cost of 1000 kg 45,000 rupees. The same 45,000 entire, right, is getting spread over 900 kg, what we call it as usable unit or sellable quantity. By the process, the cost per sellable quantity or unit goes up from 45, it went up to 50 rupees. So then the per kg cost is no more 45, it is 50 rupees. Understood this? So by the process, who is bearing the normal loss? It is the consumer. It is the end user who is bearing the normal loss. So normal loss is not borne by any business enterprise. It is by the end user, the consumer. Clear? Because this is the loss which occurs due to inherent nature of material, and it happens for everybody in this industry, not only for you or me, it's for everyone in this industry. That is the reason we call it as normal loss. Is that clear? Now the same thing, when I take that to consignment, imagine we purchase 1000 kg or the consignor purchase 1000 kg of goods and send it to the consignee, right? By purchasing 1000 kg, by incurring transportation, transit, loading, unloading, etc., etc., etc. Everything is spent by consignor and sent how many kg? Now 1000 kg. But sellable quantity? Now only 900 kg. So then how exactly the treatment in consignment? Now very simple. Whatever cost you have spent for 1000 kg will spread over 900 kg and do the valuation of stock. Let's say take this example itself. So now if I have some 20 units, there are 20 kgs, they're still closing stock on consignment. It will not be valued at 45 rupees. It will be valued at 50 rupees per kg into 20 kg, let's say 1000 rupees. Understood? So what happened here? The cost of normal loss is spread over, is absorbed by, is taken care of. It is being spread across the quantity which is sellable or usable. So by the process, cost per unit of sellable or usable quantity goes up. So when you do the closing stock valuation, let's say in the same example, I say 1000 kg of goods sent, 10% is normal loss, and so what is left out? 900 kg. What is sold? Let's say 880 kg has been sold. Then what is your closing stock? Not 1000 minus 880. As I said, what is the unit sent? 1000 kg. Let's say sold. Let's say 880 kg. Sold 880 kg. Then what is my closing stock? Not 1000 minus 880. It is 900 minus 880. So I'll say my closing stock is 20 kg is my closing stock. And while valuing the closing stock for 20 kg, will I value it at 45 rupees? No, it will be valued at 45, not 45, it is at 50 rupees. So 50 into 20, that gives me the value of stock on consignment, which comes to 1000 rupees. Understood? So this normal loss, what we have done? A very, very simple thing. Cost on change. How much now? 45,000. Quantity reduced. So same cost of 45,000 spread across the reduced quantity of 900 kg. By the process, the cost per unit goes up. So cost per unit of the goods is no more 45, it is 50 rupees. So while valuing the closing stock, we should say 20 kg closing stock at 50 rupees, the closing stock value 50 into 20, some 1000 rupees is my value of closing stock. Sir, this is the cost. How about the expenses? The same story continues for everything. Even the consignor expenses, whatever he has spent for 1000 kg, transportation paid for 1000 kg. Right? But sellable quantity is only 900 kg. Consignee took delivery of some 1000 kg, let's say, because imagine that this loss is occurring in consignees go down, evaporation, right? Or in the storage, there is some pilferages or there is some spillover, leakage, etc., which you can't help it. So in that case, what happened? So what you should do, the same treatment as you do the stock valuation, but the only change is whatever purchase cost, whatever cost of consignor, as well as whatever the cost of consignee, whichever is spent for this 1000 kg, right? But left out is only 900 kg after the normal loss. Sellable quantity is only 900 kg. What do we supposed to do? Now, whatever the cost of purchase, transportation, consignor, consignee, all this put together, whatever, will spread it over the 900 kg. By the process, whatever the cost of purchase as well as the expenses, ancillary related expenses, everything is spent for 1000 kg but will spread over 900 kg. It is paid for 1000 kg, no doubt in that, but it will be absorbed by the 900 kg by enhancing, by increasing, right, the cost per sellable quantity at a higher level. That it increases the cost, and the closing stock will be valued at that increased cost. Is that clear? So now let's come back again. So you can say normal loss is natural, unavoidable and inherent, which I have already said you, and which is due to the nature of the goods sent on consignment, which is due to evaporation, leakage, breaking, bulk into pieces. As I said, no, you buy wood, convert it to wooden structure, right? This type of loss is part of the cost of consignment. Just now I said that you can't help it. It will be definitely there if the goods are exposed to this kind of inherent nature of losses. So the consignor does not make separate entry for such loss. Did I pass any journal entry? No. What I did, I just spread the cost of that particular normal loss unit over the remaining or usable quantity. Further, however, the normal loss has to be taken into consideration while valuing the unsold stock. Just now I said when the value goes up, that is the cost per unit goes up. So of course the closing stock on consignment has to go up. Since the normal loss is a charge against gross profit, of course, who is going to bear it? Because imagine, just the same example which I gave you just now. I purchased for 45, selling for 60. What is my gross margin? Is it 15 rupees or is it 10 rupees? It is 10 rupees only, not 15. Why? Now my cost per unit is no more 45, it is 50. So when my selling price is 60, and if I'll ask you what is my gross margin, you never say, sir, 60 minus 45. You'll say, sir, your gross margin is 60 minus 50, that is 10 rupees. So of course, the normal loss is adjusted against gross profit. Fine, get back. So we'll just see here, no normal loss is a charge against, since the normal loss is a charge against the profit, no additional adjustment is required for this purpose. Of course, we have not done. The accounting treatment of normal loss is to charge the total cost of the goods, the remaining goods after the normal loss. Just before this, my example. What is my quantity after normal loss? The quantity is 900 kg. And the cost of 45,000 is spread over the 900 kg. So by the process, cost per unit goes up. Clear? Get back. So as it says, the total cost of the goods, the remaining goods after the normal loss. In other words, the normal loss would be spread over the entire consignment while valuing the inventories. The total cost plus expenses incurred should be divided by the quantity available after the normal loss. So this is the quantity available after the normal loss. In my example, as I said you, 900 kg. So the quantity which is available after the normal loss, right? Quantity which is available after the normal loss should absorb the total cost. Cost of purchase, transportation, loading, unloading, etc., 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 whatever spent by consignor and consignee till the goods reaches the godown of consignee should spread across this 900 kg. And if there is any closing stock, what is left with us will be valued at that increased price, not at the price at which it is being purchased originally. Why? Then the cost of the sellable quantity, we'll see here, the cost of the sellable quantity, that's the 900 kg, is going up per kg by 5 rupees. A simple working, I'll tell you. 45 rupees per kg. How many kg lost? It is 100 kg lost, which is normal loss. So 45 into 100, now 4,500 rupees. Do you agree to this? Very good. Now what is the sellable quantity? Now 900 kg. 4,500 divided by 900 per kg, the cost has gone up by 5 rupees. 4,500 by 900. So by the process, what happened? Which you purchase it for 45. Now the cost is no more 45, it is 50 rupees. It is absorbing the normal loss. So the 900 kg, the quantity after absorbing the after reducing the quantity of normal loss will absorb the entire cost of 45,000. By the process, cost per unit goes up. And that's the treatment of normal loss. And so who is bearing the normal loss? It is against the gross profit, or I can say finally it is the end user. It is being absorbed by the product itself. So I don't pass any separate journal entry for this. I don't do any separate adjustment entry for this. But yes, I do a small adjustment. What is that? I reduce the quantity, keeping the cost the same. By the process, cost per unit or cost per kg or cost per sellable quantity or usable quantity goes up, because it absorbs the normal loss. And after this, if at all I have some closing stock, that should be valued at the same enhanced cost of 50 rupees, not 45 rupees. So this is the treatment of normal loss.